Well, good afternoon, everybody. Welcome back to another episode of the Industrial Real Estate Show. I am very pleased to be joined by a member of the Industrial Insiders Group and a supply chain expert who also happens to be an investor. So we're going to talk about all sorts of things related to supply chain and investing, and more importantly, just going to focus on things that David feels should be on your radar in 2025. So important trends and topics to follow. But with that, David, great to see you. Thanks very much for joining me for the interview.
Yeah, thanks for having me, Chad. Appreciate it.
Well, let's start with your background. I think everybody on this call will know who you are, but if you could just provide some background on yourself, that'd be great.
Yep. So I entered the world of supply chain about 12 years ago. I started at a company called CH Robinson, and I'm not sure if they do this today, but they had like a rotational program. So for the first 6 months, I started out very simple. I was a freight broker, fielding calls from carriers, negotiating rates on lanes, conducting RFPs for clients, and putting pricing together. And then after that 6 months, they moved me over to the account management side. And that's where I really got some excellent exposure to different businesses and different verticals, what they were looking to accomplish. So things like full transportation outsources, KPI development, vendor management, and I'll go into a little more vendor management, but at a very high level, some of these companies or these manufacturers that have, raw materials coming in from so many different, suppliers, how they get a hold of that, how they make sense of that, and then also conducting RFPs on their behalf for truckload cycles, and then also LTL. So did that for about another 6 months. They decided to hire me for that. And I was there for about 5.5 years and just a really great opportunity. And then I moved over to a small freight forwarder for about 8 months doing similar work. And then after that, I came over to the shipper side and I worked for a global food ingredient manufacturer called Puratos Corporation and really just had a wonderful time there. I got to build something from the ground up. So when I came there, their transportation, I guess how I want to say is, was very decentralized, not necessarily using the best practices, again, through no fault of their own, and kind of came and ultimately decided to make some changes. We outsourced it, got them set up on EDI. Same thing where we developed KPIs, vendor management, all of that, and really got their transportation in a place where they could make sense of it, the C-level suite. They could understand their costs, where the trends were going, what sort of adjustments they had to make, particularly during COVID, which was tough for everyone, right? And then so after I left Puratos, I'm on my own now. I'm doing some consulting work, freelance work. And so just trying to really work with the small businesses that, they're trying to make sense of their transportation. What can they do to get better? How can they kind of be ahead of the curve for some of these disruptions that we've seen in the past years? So that's really my background. That's what I enjoy doing.
Yeah, and you also put out a fantastic newsletter, which we'll put a link to how people can subscribe to
Great.
that
Yeah.
later.
Thank you.
But great information. And one thing that I'd always stress is that there is a huge overlap between industrial real estate and supply chain management, and not everybody will make that connection because it seems like two distinct industries, but they're
Yeah.
hand in glove. You can't have the warehousing and logistics industry without supply chain management, and vice versa. So
Yeah.
I think what your expertise in is essential for everybody in this space, no matter if you're a broker, an investor, developer, even just somebody affiliated with the industry, like an accountant or a lawyer that helps clients out. I think having an understanding of supply chain issues is
Yeah.
imperative for the industrial real estate side too. So with that, oh, sorry, go ahead.
No, go
I
ahead.
didn't
You got
give
to
a
finish what
thought.
you're going to say.
No, go ahead. I was going to move on, but if you
Now,
have something to add.
all I was going to say is, I mean, it's been interesting, right? If you think back to when COVID happened, right? All of a sudden you saw this demand, okay? And in the supply chain, we call that the bullwhip effect, where you have this sudden demand downstream
Mhm.
in the supply chain, where now it causes an effect upstream with all the suppliers trying to get the raw materials out. So you saw this demand, right, where consumers started coming back online, the economy started opening up, right? And now there was not enough warehouse space to put all this. So you had all this development, and you've talked about it in your podcast, Chad, where now all of a sudden you have all these warehouses that have finally come online, right, before COVID, and they're sitting empty. And these, I'm talking large warehouses, right? So
Mhm.
everyone's kind of waiting to see when this recovery is going to occur. And we've been in a freight recession now for about 2 years. If you go on and you listen, and I'll sit on some of the publicly traded trucking companies' earnings calls, and the message from the CEOs is all the same. Like, it's been a very challenging freight environment. And so how that affects industrial, right, is when the manufacturers aren't producing as much product, not as much products moving through the network, and it's going on trucks. So now you have these 3PLs or these warehouses where clients are saying, I need less warehouse space. They're moving out of these warehouses altogether. And so now you have all this vacancy, and you've seen Prologis have come out their reports where vacancies are up. I mean, in the grand scheme of things, 5% is not horrible, but at some point that's going to come back down when the economy starts to kick up, production starts, and then those warehouses are going to get filled up again.
Yeah, that's a great point, and I think that alludes to the connection between the two is that
Yeah.
they move together. So yeah, I think that there's a lot of things that we can explore with this. So the first thing that I think is interesting were the tariffs that President
Uh,
Trump proposed. 25% for Canada and Mexico, 10% for China. Let's put the China one aside for a bit and on the Canada Mexico ones, he proposed it, and I believe it was on a Friday, and then he was going to have it going on this past Tuesday,
yeah,
and it never even hit that. It was
yeah.
pulled back with both Mexico and Canada. What is that just from your perspective? That's a negotiating posturing of President Trump. I think that's just how he negotiates in general. But what did you hear when he was putting those tariffs in place and he was preparing to proceed with them? What was your reaction? What were you hearing about that?
So I think really his overall goal is he wants to bring manufacturing back to the United States. And I think, you've heard certain companies now where they're talking about, you maybe heard the term nearshoring, right? Where bringing manufacturing back, but opening up operations in Mexico, okay? But I think the challenge that you're seeing with manufacturing is if you just go on and one of the guys I follow on LinkedIn, his name's Jason Miller. He puts a lot of great content out there. But if you look at manufacturing numbers, it's just kind of been in the doldrums, right? It's just kind of been stuck. So, and when you factor in the labor costs, right? And I don't know, for example, like what are average labor rates in Mexico versus China. So, like, how's that going to come into play? What's the cost of real estate in China versus Mexico? So, I think he talked about his policy as America first, right? So, what he's trying to do is he's trying to bring those jobs back to the US when the reality is manufacturing employment just has been it really hasn't been there for a long time. I mean, back in the 70s and 80s when they started pushing all those jobs were lost, they've never really come back. So I think what he's trying to do is trying to have more of a presence here in the United States, trying to ratchet it up because, he wants America to be, leading in manufacturing versus these other countries.
Yeah, and it's a fair goal. I think that that's incumbent on any leader is to put your country's interests first, and I think that that's a good goal for any president to have. What he went up against, though, was a very cynical outlook from investors and manufacturers and the stock market as a whole, which on the Monday it dropped pretty big right at the beginning, and I think that that forced him to have to walk it back a bit because the economies are so interconnected that you
Yeah.
can't just apply a tariff and expect things to go your plan. What I want to get your thoughts on this. So I put out a poll and I said, President Trump is about to put these tariffs in place. How long will they last? And the options I gave were 1 week, 1 month, 1 year, or indefinitely / we're entering a prolonged trade war. And overwhelmingly, most people said indefinitely. And then it turned out to not even last a day. And I didn't even put a day as an option on the poll. Where do you think? What using your crystal ball and your outlook? Is this going to be a year of tariff talk, or was that just setting the stage for trying to negotiate better trade deals?
I think it depends. If this was his first term, you might have looked at it longer because, again, you have to be careful if you're trying for reelection. You don't want to upset the apple cart. I mean, politicians, right? They have to walk that fine line. So, I think he's trying to show these countries that he's serious. But the one thing he's got to be careful of is inflation is still not where the Fed wants it to be. It's still above that 2%, right? So if he implements these tariffs, right, it's really just a tax. What are these companies going to do? They're just going to pass it on to the consumer. Eventually, we're going to be the ones to pay for that. So does he want to really inflict pain on the American people because things are already expensive as it is? So I think this is more of like a posturing to try and get them to come to the table and get serious about some of these things versus, I mean, I just can't see this going on for months because I don't think the American people would have the stomach for that. I don't think business leaders would have the stomach for that because if consumers all of a sudden they can't afford these things and inventory is starting to pile up on the shelves, well, companies have to carry that inventory that's carrying costs, eats in their profits. I understand the idea and most people do, but the reality of trying to keep that screw turned to these trading partners, I just don't know how that's going to work because it also hurt the trucking companies and the supply chain advisors and things like that consult these companies. Like, what are you going to do? So I think this is more of a let's get them to the table. Let's get them to concede to what I want. So, like for example, Mexico, he wants the fentanyl to stop coming across the border, the migration coming across the border. So, getting those concessions, I think, is really just that leverage he's pulling to see if they'll be serious because they rely on our economy. Like they need us to buy those goods, otherwise they're going to go into a recession or a depression.
Yeah, and that point that you made earlier is so true in my mind. Is if by putting tariffs in place, it's inflationary by nature. So if the feds really are trying to bring down inflation so that in theory we could start lowering interest rates, that would be completely curtailed if there is a tariff war. And what I think a lot of people fail to recognize is that the overnight interest rate or the Fed rate really only moves short-term interest rates. The
Yeah.
the long-term interest rates are basically driven by supply and demand of the bond market and 10-year
Yes.
treasuries. So if
Yes.
if those don't move, then inflation is almost going to be independent of that. So I think that's a huge part of it. I hope that this isn't going to be a year of tariff wars and something we have to talk about all the time. And I hope that they can just go on to solving other problems because there's a lot of other problems too. One thing that I wanted to get your thoughts on were just global trade in general right now. So the Panama Canal was backed up. There were droughts, and I mean, there's this different storylines with the Panama Canal in general. But what's your sense right now on the global trade market and the health of that?
I think it's tough because we're so dependent on these other, countries and economies to, for our goods. So as Americans, right, we want cheap products. Well, you're going to have those products come from companies like China, okay, or countries like China, excuse me. So I think it's one of those things where all these geopolitical conflicts now are having, so like the Ukraine-Russia war, right? Most people might not know, but Ukraine is a major exporter of grain. So when they can't export that product out there and now they have to go to other suppliers, that's going to push the cost of grain up, right? If they're going to put sanctions on Russia for oil, that's going to push oil up in other areas. So I think we're so dependent now on these other companies to bring products in. I mean, we're in a trade deficit as the United States. We bring in more products than we ship out. So it really kind of becomes where I know they don't want to interfere with other countries, conflicts, but at the same time, you almost need those other countries to behave themselves and act in a way so that way we can continue to have these goods and the supply of product is continuous because if that gets upset and we have to start going to other parts or other countries or trading partners, it just pushes up and it goes right back to the inflation discussion. So I think it's impossible to solve all these other countries' problems. I mean, if you look over in Israel and Gaza, right, they've been fighting for years. This has been going on for years. So I just don't think you're going to flip a switch and have these conflicts stop. I think they're going to go on for a period of time. They're going to continue to have to try and negotiate and just kind of keep working. But global trade is something that it's not going away anytime soon. Even if we do bring in some of the nearshoring, these companies move there, they still might have to get suppliers from other parts of the world to bring that product in to manufacture it. So we're going to depend on them one way or another.
Hmm. Speaking of critical commodities, what's going on with the price of eggs? What's driving that?
So that's funny. My wife said to me, she better stop eating all the eggs. The last I've read, I know they're talking about bird flu. I've seen reports of that causing that. So they're having to kind of euthanize chickens and hens and things like that. So that's kind of a problem they're concerned about. But I mean, I'm not enough of a health expert to know what causes the bird flu, and then they have to kind of euthanize these chickens, like I said. So I think it's one of those areas where it's supply and demand. If they start reducing the supply of chickens because this bird flu is taking off, like it's just going to keep pushing the price of eggs up. So I guess I would tell people go buy egg whites or buy something else. Like it's just I, I would play it back to Chad. There's been so much disruption, so many challenges, particularly on commodities, but you just saw the forest or the wildfires, excuse me, in California. That was a big challenge, and that affects supply chains. Several years ago, when the Suez Canal got stuck with that mega ship, right, that backed up other ships. So I think companies now really have to start to understand. You have hurricanes right down the southeast of the U.S. where these come through. They cause damage and destruction. Excuse me, these companies have to figure out like how are they going to keep businesses running and have these contingencies in place to keep the bit. So it really, Chad, I think business have to be more vigilant. They have to look at more risk management. Do they want to carry more inventory over here? Again, there's going to be a trade-off because now you're going to have to pay more for that inventory to sit in a warehouse that might not move. But again, you're hedging on disruption. So it's supply chain is very difficult. It's becoming more complex. More and more companies now are investing in AI to kind of help them make these decisions. But it's definitely a need that companies need to be on top of because without it, right, they're just kind of flying blind.
So how does a company go and determine their strategy? Because there's the full spectrum. You're going to have a company like FedEx or a big 3PL that will have locations strategically throughout the world. And then you might have another company that only services a region of the US, or perhaps it's even just one city. How does a company try to incorporate all this supply chain information into the needs that they'd have for how much warehouse space that they have? Or is it one of those things that you need to be reactionary as opposed to trying to be proactive?
I think it's a combination of both. So if you think about companies, so I'm talking manufacturers and distributors, I'll talk about them first, Chad, right? So you have inventory strategies. And when you think about an inventory strategy, you might have a just-in-time inventory where that distributor, that manufacturer will only stock enough raw materials to produce, and it will only stock enough finished goods to meet customer demand, right? They don't carry any safety stock or buffer stock. So for them, you saw a lot of this before COVID where you had some companies, and when I was at CH Robinson, we had this customer, they made industrial boilers and they only wanted just-in-time inventory. Now they paid for it because they would have one man or a supplier ship their parts from Michigan to New York, and we would always have to team a truck overnight to get there for their production line. So they would play the just in time because they didn't want to tie up working capital and have all this excess inventory. After COVID, all these companies that were doing the just in time inventory strategy switched to what I call just in case, where now what they said is, they're still trying to figure out where demand is, the dust selling from COVID. We want to have a little bit of extra stock for raw materials so we can meet demand. We want to have a little bit of extra safety stock of our top items so that way we can meet customer demand for the final mile. So manufacturers have really kind of looked at that in terms of inventory, like where they want to play. So to your point, preparing, but also trying to be reactionary. So I'll give you an example. January 15th, we almost had a port strike on the East Coast in Gulfport. So in one of my videos on my YouTube channel, I had talked about, I said, hey, business owners, if I were you, I would maybe try and bring in a little excess inventory because if they go on a port strike and your material's stuck at the port or you can't get it in, you might want to have a little bit of extra material to kind of meet that demand for a period of time. I mean, it's going to run out, but it'll give you a little bit more runway. So you have to look at it from an inventory standpoint. From a logistics standpoint, Chad, I'll take some of these LTL carriers. They have terminals and networks all throughout the US, all throughout Canada. What they will do is they'll study certain geographic regions. So in the US, for example, you're going to have your Chicago's, your Dallas, your LA, your Atlanta. Those are all the major freight hubs in the United States. They're going to have LTL terminals there and in a presence. But if they're delivering product to like rural areas, like let's say somewhere in North Dakota, instead of investing in the infrastructure and having these terminals, they'll partner with regional carriers, local mom and pop carriers to make those final mile deliveries. So instead of investing that money in a distribution center and LTL terminal, they'll partner with them. So they really have to be strategic about where they want to have a presence, where they want to own their terminals. And so they'll kind of look at that cost analysis to see what makes sense.
That's very well explained, and I'd like to dig a bit deeper and actually go even a higher view, just to get you to explain some of those terms, because I'm sure a lot of people listening will be familiar with it, but I'm sure there's also people that aren't familiar with it. So we've talked 3PL, we've talked LTL. Can you break down and describe what those actually are versus like a company like Walmart that might have their own supply chain from start to finish?
Yeah. So a 3PL it stands for third party logistics company. All they simply are, Chad, they're brokers, right? So when you heard me talk about when I was at CH Robinson, I was a freight broker. All I'm doing is I'm connecting a shipper and a carrier together to move a load, right? So that's what 3PLs use. You also have 3PLs in terms of warehouse operators, where maybe you own a warehouse, Chad, and a third party warehouse operator comes to you and says, we want to lease this warehouse from you. So you own the building, they operate the warehouse, they have their clients, you collect rent, and they bill their clients. So they're again, they're kind of a broker, right? They're bringing the parties together. When you think about LTL carrier, all that stands for is less than a load. So you have your truckload carriers, JB Hunt, Schneider's, they're filling up those 53-foot trailers with product. LTL carriers are doing the same thing, but what they're doing is they're not using one shipper to fill that trailer up. They're using maybe 20 or 25 different shippers to fill that trailer up, and then it's moving throughout their network to deliver to their customers. Does that kind of answer the question?
Yeah, it does. I think it's important for people to note how prevalent these companies are. Like they occupy a considerable amount of warehouse space
Oh yeah.
across the world. Like that's one thing that new people in the industry always are curious about is who's leasing all this warehouse space. You hear that there's billions of square feet of industrial space. Well, like, who's leasing it all? 3PLs and LTLs lease a considerable amount of it. So having them on your radar and understanding their pain points right now and what they're looking for is a pretty good opportunity for anybody in the industry. When you're considering what a 3PL, or let's even just assume that any logistics company, what do you think that they're looking for in a warehouse?
So really, for a lot of these companies, I would say they want to have easy access, like pallets in, pallets out. They don't want to be like a manufacturing plant where you might have to go through a maze to get to racking or things like that. They want, when I say an open floor plan, Chad, like it's open, but you have racking going up as high as you can, because again, the more pallets you can put in that warehouse, right, you can spread your cost across more units. So for a 3PL, it's a warehouse that's open, it's got the racking, it has dock doors on either side, right? So you can kind of have one side, and I'm just, assuming, right, it's pallets in coming in where you have inbound. The other side of the warehouse is outbound, so they kind of can do that. They have it set up where maybe those operators understand and know what items are the top items. So, we talk about product segmentation and supply chain, where you set up your warehouse where you have your A products as close to the door as you can, the top sellers. Maybe your B are a little bit closer, and then your C products are all the way in the back because they're not moving as much. So you kind of want to have your 3PL structure and set up that way. Um, I would say you obviously want to have, the bigger the distribution center, the better, because again, the more product you can put in there. You want to have large truck yards where you can just park a bunch of trailers. You could have yard jockeys where they just are able to move them around. They have easy access. I think now you also have 3PLs that want to have the latest state of the art buildings where you have LED lights, you have the top of the line sprinkler systems. Um, I think one of the podcasts you were talking about, you had an expert on there where he talked about being able, the floors able to hold like the weight of the racks, so certain types of flooring. So really just up to date, modernized warehouses that can really accommodate what they're looking to do.
Yeah, great explanation. I'm going to throw this out as well, is that I think it'd be awesome to do a tour of a large warehouse operator and actually get a breakdown from them on how the goods flow and how the pallets in, pallets out, how the whole
Yep.
process works. So if anyone's listening and you work for a company or you're in a position where you could do a tour, I think that'd make for a fascinating video, and I'd invite David along for that. And who knows, maybe we could even turn that into a bit of an event where whoever wants to come could come, and we could turn it into a warehouse tour and maybe a dinner or something. So let's keep that on the radar, Wyatt. I think that'd be a very cool idea to do this year. Great explanation, David. I think if we were to put that together with an actual walkthrough video, I think that'd be awesome. And I agree with your last point. It is a very complex topic.
So I'll take two commodities, right, that the consumer doesn't have a lot of control over, right? You talk about energy and food, right? They always strip them out of the consumer price index, where they talk about less food and energy. Well, to your point, yeah, no one's going to spend $10,000 on eggs, but if the price goes up, some people are going to be able to absorb it, some people maybe not. If you transition over to just say, natural gas or oil, people aren't not going to heat their homes. Like they're going to have to take that price increase. I mean, they could not, and then they could have their pipes burst and things like that. But I think it's just one of those things where, as the companies that buy these goods or these commodities, right, and they move them through their network, okay, they have to pass those costs on somehow. I'm not debating that. Some people might look for other alternatives, but when it comes to energy, I don't know where else you're going to go for natural gas or oil to heat your home. In terms of food, yeah, you could look at other alternatives and see what options there are. There's no question about it. But I think that, it's really going to come down to how much pain can people handle, how much noise is it going to create in the political environment, how much risk is there going to be to politicians that aren't going to get reelected, and then are they going to basically say the wind's changing direction, we need to do something about this. I think that's kind of how I look at the tariffs, because again, in the end, it's just a tax, and they have to pass it on to someone. So how much leeway are they willing to give, and how much pain are they willing to accept before they kind of say we can't do this anymore? That's just my take on it.
Yeah, I studied economics in university, so I've studied it academically, and I've also just been in the business long enough now that I've seen a lot of it in practice. And the one thing that I've taken away from it is that a lot of economic theory is based on it occurring in a vacuum. And I've just realized that economics is so much more infinitely complex than
Yeah.
being able to look at something in a closed loop system. So you could go and put a tariff on, and to Haas's point, someone just wouldn't buy eggs, or they just wouldn't buy whatever it was if it was a nice to have. But as you mentioned, David, there's the need to have.
Yeah.
And I think that extends even beyond energy, which is the biggest one in my mind. I completely agree with that. But even just a car. So if somebody needs to drive and they've had a car that's beyond repair and they wanted to go buy a new one, there's so much cross-border transactions that happen with
Yeah.
manufacturing of a car that now all of a sudden you're just adding more cost to it. And I think the best way that I've heard it described is that a tariff is a consumption tax. So
Mhm.
to your point, Hats, and I think this kind of explains it all in my mind, anyways, is that it's a tax if you're buying something. If you don't buy it, then you're right. It probably isn't a tax. But if you need power, you need gas, and you need all these utilities to your house, and you need to buy a car, all of a sudden that consumption tax is the direct result of the tariffs.
Yeah.
So I think going back to our original, what we said at the beginning is that uh, trade makes prices cheaper. And the more trade that you have and the more partners you have and the more secure partners you have, assuming that everything goes according to plan with no
Yeah.
disruptions,
Yeah.
then it does make it cheaper. But it's very complex. And I just really hope that this 2025 isn't a year of tariff talk, because that's nobody knows. That's the other thing that I would say is nobody has a clue what tariffs would actually do, because we don't know how long they would last. We don't know what retaliatory measures the other country takes, and then do you enter into a trade war? Nobody has an answer on it, and nothing good comes out of it in my mind.
I would say too, Chad, I think the economy is also fragile in the state, right? When you look at ISM index, right, Institute for Supply Chain Management, where they look at manufacturing output, I think 1 month in 2024 where it broke over 50. So it's been in contraction for the whole year of 2024. So can the economy really handle that? Can they handle these tariffs? Can they handle these price increases? I mean, just look at the inflation, what we talked about a few weeks ago, Chad. Just look at what property taxes are on industrial buildings and insurance costs have gone up in the past few years. I mean, they're passing these costs on. The consumers are paying it, but it's squeezing people, and I just don't know how long they can really handle this. And again, with insurances, I get it. They're trying to reduce their risk. They're pulling out of these areas where like for example, California State Farm was leaving, or they weren't writing new policies out in California because they were taking all these losses. So I don't have all the answers, but these are things that again are affecting people's pocketbooks. They're trying to, figure out how do we handle this. So I don't know what the answer, but 2025, I think is going to be, it's probably another year of uncertainty. I think everyone's waiting to see, is manufacturing going to come back? Are they going to start to, go into expansion? Interest, like I said, inflation is still high. The Fed might not cut rates again this year. I mean, they made three cuts in 2024, but I think everyone's just kind of on the sideline because inflation's still high. So I think it's still the wait and see approach.
Yeah, I think a lot of people were hoping that this year would be a bounce back year. That was the whole mantra, was survive till 25. Well, we're here and it doesn't seem like a whole lot has changed, even though there's a new administration and new president. It doesn't seem like a whole lot has actually changed right now, because for real estate anyways, the driving factor is going to be interest rates. And if we have high inflation, it's hard to have both. It's hard to say we want to get inflation down without some correspondence in the rates. So I think it's still going to be a tricky year.
Yeah.
What else are you seeing? What else is going to be? Haas says it's now persist in 26. I like it. That's a good one. What else are you seeing? The proverbial headwinds and tailwinds that people always talk about. What are you seeing that's on your radar that people should be watching this year?
So in the beginning of the year, it was still the port strikes because that was a big concern for companies. That seems to have looked to been averted, Chad. So I think we can kind of cross that off the list. But still, a 60% increase in labor wages, like where's that cost going to go, right? So that was something. I think the tariffs, that's still something. I think you still have unsettlement in the Middle East. Like, how's that going to affect oil? Because trucking companies, for example, they buy a lot of diesel gasoline. Like, how's that going to affect their operating margins? Um, you still have the Ukraine-Russia war going on. I mean, I know it's not on the front page of the newspaper anymore, but again, how's that affecting the price of grain? Um, I think, I think supply chains really just need to kind of think about these disruptions. Once you get into June, Chad, you get into hurricane season. How's that going to affect the Southeast? The wildfires that occurred out in California. I mean, that was a one-off. That was a terrible situation, but it's not uncommon for California to have wildfires. How's that going to affect that state's economy? We're in the first quarter, right? So we have a lot of snowstorms that come across the U.S. up in Canada. How's that going to affect supply chains? Railroads, trucking companies getting product to the shelves on time. Um, I think a lot of, and again, I'll go back to some of these calls I've sat on for these publicly traded trucking companies. They're faced with rates are starting to creep up, which is good, but the volume is still suppressed. So that's eating into their revenue, that's eating into their profits. It's just, I think the big driver really is, Chad, is what is going to happen with the economy. Are we going to kind of get out of this rut and are we going to start to see demand come back where now you have economic expansion, now you have growth and those types of things? I mean, that to me is the big areas that I think companies should be looking at and trying to figure out what do we need to do to prepare for this.
Yeah, you mentioned the manufacturing and reshoring angle a little bit while ago, and what I found really interesting with that is that it's been mostly high tech jobs that have come to the U.S. As a result of the CHIPS Act and the Inflation
Yep.
Reduction Act. Billions of dollars have been given to companies to incentivize them to produce semiconductors and gigafactories and battery technology. It's primarily been that high level jobs. On the manufacturing side, the more traditional side, like you said, it's been stagnant. It started decrease in the early 80s and it's never
Yeah.
really come back. What what drives the return? Is it automation? Because labor is always going to be the biggest component in making a t-shirt or something. So
Yeah.
is it automation that'll drive those jobs back? Or does the government say we'll subsidize t-shirt making and all this other traditional manufacturing so that it's more lucrative for you to bring jobs back? What is the catalyst that would actually bring traditional manufacturing back?
I think automation is a big piece now, Chad. I mean, I think you have a lot of these companies now, they are looking to automate. They're using AI to kind of help them make these decisions. I think, when you look at, and again, the cost of real estate, right? How much is it, if you're going to buy a factory or build a distribution center in Mexico versus what you have in China? I mean, you're eliminating transport time on the ocean. So there's a trade-off there. You're reducing your transport costs coming from China into, certain US ports. So you're reducing your network to network costs. But I think, Chad, it's also what can you really pay manufacturer workers that is a competitive price that won't price you out of the market for the product you're trying to sell? I mean, some of these union jobs, they make a very good living. And they're still able to be competitive and sell their products, right? So, like you look at these auto manufacturers, for example, you were talking about they were getting subsidies to, create electric vehicles and cars. Well, that's gone away now, Chad. I mean, a lot of these
Mhm.
companies were surviving off the subsidies from the government, and that's how they're making their profits. So now that that's gone, I don't know how those companies can continue to develop and make those types of cars because I know the CEOs, they came down to Capitol Hill and they just said, look, we're not opposed to making these cars, but we're losing money on them and they're not profitable enough. So if the government's cutting those subsidies and those credits and all those things, that's getting put on pause. So are you really going to build these manufacturing sites? Are you really going to get the labor you're talking about? I think there's challenges upstream, if you will, before you even get to the labor component. So I don't have the answer. Again, I understand the whole America first, want to bring the jobs back, but I think when you just look at what it costs to be in business, to buy land, to have labor in the US, it's very expensive.
Yeah, and it does speak to the challenges of onshoring or reshoring, and that's a buzzword that's been going around for a couple of years now, but it is much more difficult than a lot of people realize. And even with some traditional industries, steel being a good example. So US Steel had an agreement to sell to Nippon Industries,
Yep.
a
Yep.
Japan steel maker, and that
Hmm.
got I believe it was bilaterally blocked. I think both sides of the aisle
Yes.
were opposed to it, and it was a Biden on his way out basically rejected it and said
Yes.
that for a number of reasons, national security. What are your thoughts on that? Does that get revived? Who's the ultimate buyer of U.S. steel, or is it do they just keep chugging along and hope things get better?
I mean, a lot of our steel's imported from China, right? It's affordable. I mean, it's funny. It's our scrap that we recycle here in the US. It gets shipped over to China. They make steel and bring it right back to us. So I mean, you kind of have to stop. And again, I'm not a steel expert by any means. You have to wonder, like, gee, we couldn't recycle our own steel and scrap and make our own steel here in the US. So I mean, steel's a very complex, I don't know enough about it, Chad, but I think to your point, like it's still going to be consumed. I think there's still going to be a need to build these warehouses because you see the e-commerce growth that's only going to, and I saw some projection, I forget what it was, but just the compounding growth up to 2029, it's in the trillions of dollars. You're going to need to build more warehouses. What's unique about that is, you're going to start going out in these rural areas because a lot of these municipalities, they don't want these warehouses, so now you have to deal with that whole situation. But I think we'll continue to consume steel. More warehouses are going to be built. We're still going to buy it from China unless we can figure out a way to recycle our own scrap and make it here in the US. But I mean, that to me is just, it's a commodity that we're always going to need.
Yeah, and from a national security standpoint, if you can't control steel as an output, you're going to be at a significant disadvantage if things ever get bad. So I think having the ability to domestically make and control that is pretty important. And maybe that's where the government should be looking to add some subsidies instead of just going after chips and semiconductors. Maybe they should be looking to subsidize steel production a little bit more and offer some incentives so that we can figure out how to recycle scrap metal and make it domestically as opposed to shipping it overseas, having it refined and then shipped back to us. Like surely there's a more productive and efficient way of doing that. So yeah, another interesting thing to explore
Yeah.
over the next coming years. On the warehousing side, because you mentioned e-commerce growth is picking up, and I everything that I've read is the same. It's showing a very healthy trend line into the future,
Yep.
which is
Yep.
going to need to mean more warehouse space. And we have a glut of big box industrial right now, especially in some markets, Dallas and Phoenix being the two major ones,
Yep.
where there's just a lot of inventory. But interest rates have caused new supply numbers to drop. It's at
Mhm.
decade lows right now for new inventory coming on the market. So at some point we might hit that supply demand balance again, where we don't have enough inventory into the future, and that could cause some issues. What are you seeing on that side from companies that are trying to forecast what space that they need? And I guess what I'm trying to get at is where is that tipping point where we do start seeing some positive absorption and these large swaths of vacant warehouse starting to get absorbed?
I think, for some companies, right, they might want to look at it from the perspective of, am I a warehouse operator? And what I mean by that is maybe they'd be better off to go lease warehouse space or, lease space from a 3PL and have them operate the warehouse and kind of just be more efficient about it. So I think looking at that first and foremost, um, I I would say, Chad, I think, for companies to try and prepare and look at that, and I saw this when I worked on the shipper side, it's getting that forecast from your customers 3, 6, 9, 12 months out, kind of getting an idea of what are they expecting their demand to look like. And again, it's almost like a crystal ball, trying to figure out, when's the economy going to tick back up, and then going back and saying, okay, here's what we're going to need to produce. Here's how many pounds, here's how many pallets that's going to take. How much space do we currently have in our warehouse? Okay, it's an extra 8 million pounds. We don't have the space for this, so we need to go find a warehouse. That 8 million pounds equates to 500 pallets again. I mean, 500,000 pallets, excuse me. We need to go find a place to secure this because this is business we have in our pipeline. So I think that's how businesses would want to strategize and look at it, but they have to make sure that their customers are giving them that forecast. That's something else I talk about in my videos on my YouTube, where it's so important for them to kind of have an idea, because otherwise you're just guessing how much product you're going to need at a given time. So I think that's how companies really should strategize it. But to my point earlier, hey, we have warehouse space. Does it make more sense for us just to stock raw materials for production and push our product out to a 3PL and lease it? Or do we keep it in house and really kind of figure out how to manage a warehouse effectively and keep our costs down? Does that make sense?
It's interesting. I don't know if you heard the news of what happened north of the border in Quebec, where Amazon warehouse employees voted to unionize.
Mm-hmm.
And what Amazon did is they said, we're just shutting it all down. So they basically I shouldn't laugh because there's a lot of people that are out of a job, but it's almost one of those things where they voted for something that ended up costing them much more than just a pay increase that they were after.
Yes.
And what Amazon is looking to do now is basically just outsource it all to 3PLs. Where is that cutoff line? And maybe that's an impossible question to ask, but where is that line where companies decide that they're either going to try and do it their own, so they're going to go out and lease a 200,000 square foot warehouse, or they are just going to go through 3PLs?
So I guess the way I would look at it, Chad, right, is if I were talking to a company, I'd say, all right, what are all your costs? Like, what's the cost to insure this building? What's your labor cost? What's, your taxes, all this, and kind of figure out, okay, here's what it costs to operate this building on an annual basis, divided by 12. Okay, how many pallets do you have in here? And kind of break that out across all the units you have in your building and say, this is what it costs for me to store one pallet in my building. Then go to a 3PL and say, what do you charge for a pallet? And then kind of that's where you start to maybe look at your cost basis and say, well, gee, it's cheaper than 3PL, or no, you know what? It's a lot cheaper for me to house this product in here. Maybe I'll keep my own warehouse. Now, there are costs associated with carrying the inventory longer and into your working capital. But that's kind of where I would start, is take all those costs into consideration, figure out what it costs per pallet to store in a certain building, and then compare it to a 3PL. But the other thing you have to consider too, Chad, is where's your geographic footprint? I mean, you know this, right? Certain warehousing costs are going to be more if you're, let's say you're in Chicago versus if you're in, Tuscaloosa, Alabama, right? I'm just making up places. So wherever your warehouse footprint is, you're looking at, hey, if I'm in the same region, what would it cost me to put in a 3PL versus if I house it here? Or maybe I have a strong customer base out here. Instead of shipping it here, my cost to ship to these customers is X. What if I move it into this warehouse? Now I've reduced my final mile. I have a shorter final mile. So there's all those. It's not an easy, I guess what I'm saying, it's not an easy question to answer, but those are some of the factors you would take into consideration in an analysis.
I know that there's going to be a pretty big range there, but I've never actually thought of breaking that down as a price per pallet. But like a market like Tennessee is going to be a third of the cost of having it on somewhere in New Jersey. But is there a range that you've seen on what that price per pallet is for a company to go in and lease space?
I think it depends. I mean, I would say you might be looking at anywhere pre-COVID, maybe 20 to 50 bucks. Post-COVID, maybe you're at like 50 to $100. I mean, it really just
Hmm.
depends. It might depend, if you can get your product in racks and you're taking up less floor space, it might be cheaper. But if you're taking up a lot of floor space in a warehouse, that's going to drive your price up. So there's certain characteristics. Is it temperature control?
Hmm.
Right? Are those are the sorts of things that you have to take in consideration in your analysis to really understand where you're going to be. But I would tell you that, yes, it's different by market, but I'd say maybe conservatively 70, 50 to 100 bucks, maybe more. It just depends how in demand that warehouse is, how close it is to a certain geographical market, and kind of go from there.
Hmm. Yeah, that makes sense. So oh, I see has another one. He sees a lot of 3PLs subleasing spaces to other 3PLs. How does that all work? That's a great question.
So I have never seen that. I'm not saying it doesn't exist, but I mean, typically what I've seen is, like, we'll use Chad's example. Chad owns a warehouse. A 3PL comes to you and says, "Hey, I want to lease this space," and they just do their thing. Maybe they're subleasing. Maybe that 3PL all of a sudden now has had their customers scale back because they don't have as much demand. So now they have maybe 10 or 20 or 30,000 square feet they don't need. So then maybe they go back and negotiate with their property owner and say, "Can we sublease this?" And they say, "Yeah, that's fine." So there certainly could be some of that. I think you've certainly seen many 3PLs restructure their leases negotiations with demand falling off after COVID. So I'm not saying it's not happening. I haven't seen it, but it wouldn't surprise me.
Yeah, I've seen a little bit of it, but it's interesting because there's a couple dynamics at play. One, these 3PLs have to be able to grow and shrink as the market requires, because if they don't have enough inventory or enough warehouse space, they're not servicing their clients that need it. And if they
Yep.
have too much, they're burning money on space that isn't being optimized. So they
Yep.
always need to be growing and shrinking. And a lot of times they will have relations with other 3PLs so that if they do have more coming in, they might say, hey, can we lease 20,000 square feet of your space on a short-term basis? So it would be kind of in
Yeah.
that sublease. But on the other hand, it's a competitive advantage to say to that company, no, we're not giving you any of our space because now
Yeah.
you're going to be pinched from the spot that you can't satisfy your client. So it's
Yeah.
still very competitive, but I suspect in the circumstances where there's companies that just get along with each other, and maybe they have an agreement, a loose agreement in place where that if one is growing and there's surplus space, then they can negotiate back and forth. But yeah, that'll be a really interesting thing to follow because I think 3PLs are going to keep growing as well, and
Oh
that
yeah.
they will be big drivers of the market. Oh, sorry, go ahead.
No, I was going to say, I think even when you look at from a 3PL perspective, from a transportation, right? A lot of these 3PLs exist because shippers recognize that it's not their core competency. So what they're doing is they're leveraging the 3PL's technology, their expertise to go out and conduct these RFPs to manage their transportation so they can focus on their core competency and do things of that nature. But I would say on the warehousing side, Chad, you just have some 3PLs that it's their niche, it's their focus. All they do is operate warehouses. So it almost makes sense in these cases that a lot of these companies now are starting to analyze and understand, hey, maybe I should outsource this, maybe I should put this because now I have the ability to flex. I can
Mhm.
decrease inventory, I can increase inventory based on business needs. And so I think that to your point, it's only going to grow the need for warehouses. And I think 3PLs will grow with that need because they'll just be better operators and they can add value.
Yeah, it speaks to Haas's point, persist to 26, because at some point the new inventory of warehousing just hit a wall, and there's a lot there, but there's not much new coming on. So I
Yeah.
agree with you for all the reasons of e-commerce and 3PL growth and just general economic growth. At some point it will rebalance, but there just could be a little bit of discomfort in the meantime.
Yep.
Uh, just wrapping up, and I do want to just talk about your YouTube channel and your newsletter at the end. But before we get to that, what are you following this year? What do you think is going to be the major storyline of 2025?
I think it's the tariffs we talked about. And I think it's really a lot of these transportation companies are preparing for the upswing. So you talked about this probably a while ago, but when Yellow went out of business, right? All those LTL terminals, they've gotten bought up. So a lot of these companies are preparing for the upswing. They've got the real estate, they've got the capacity to have that influx. Even JB Hunt, I read an article where they have like 30,000 intermodal containers ready to go. So they're investing now. Again, it's a lot of money to put out. It's a lot of capital they're allocating for these projects. But I think it's just, everyone's waiting to see what the administration does because, for the longest time it was, well, let's get the election past us and then the dust will settle. Well, now the administration's in. Now they're putting forth their policy and their agenda. And I think everyone's still, you can say you want to do something, but it doesn't happen overnight. Like we talked about the nearshoring, like these companies aren't just going to, put up a warehouse in a day and start shipping from out of Mexico. So I think it's giving the new administration 6 to 12 months. What other types of initiatives are they going to do or want to, put forth, and just kind of be cautious because I think companies are just really kind of trying to wade into the water as slow as they can right now.
Yeah, that's a great point, and I've heard that too. I heard so many people in the fall saying, "Well, we just want to wait to hear what the election results are,"
Yeah.
and then that came in, and then the narrative changed to, "Well, now we just need to see that he actually gets in peacefully." And now that that's happened, now they're saying, "Well, now we need to see what actually happens with
Yes.
their plans." So it does seem to be a bit of kicking the can down the road, but I think 2025 is going to be a very interesting year. And has said that reciprocal tariffs allegedly coming next week, which I'm guessing would be from China. So
Yeah.
I'm just hopelessly naive, but I hope that tariffs aren't the driving storyline of 2025. They very well could be, but I just personally hope that they're not. But let's your newsletter and your YouTube channel. I'll
Sure.
put links to both of these in the show notes so that people can go and check them out. And Wyatt just put that in the chat as well. But
Okay.
maybe just give a little bit of overview on that as well.
Yeah, so really the YouTube channel kind of just came out because I'm a supply chain nerd. I like talking about it. I like to share my knowledge and expertise. Really just trying to reach out to some of those small business owners that, hey, they're trying to figure out how to make sense of their supply chain, what they can do. So it's really just helpful tips. Try and make my videos maybe 5 to 10 minutes at most. And it's called the Supply Chain Logistics Hub on YouTube. To piggyback off what you said about my newsletter, if people go to my website, it's www.hoffmansupplychainadvisors. At the bottom, they can sign up for the newsletter. But really, all I try and do, Chad, is so you asked me what I'm looking at, for the year. I really just recap some of the major highlights that I've seen each month and just kind of share. And I try to make it short enough so it's not, burdensome to read, but maybe two or three paragraphs per topic. One of the things we saw, for example, the California Air Resources Board, they rolled back their emission standards because with the new administration in, right, they know that the EPA is not going to necessarily work with them on that. So some of those topics, we kind of go over company earnings every quarter and talk about, some of the things I'm looking at and what the CEOs are talking about. Any disruptions, we talk about the wildfires. And there's two other areas, Chad, I'll look at in the newsletter that I'll post. So there's called the CAS Index, which is a wonderful resource people can look at. And all it really shows is, freight environment, what shipments are doing in terms of if they're up or down on a national basis, expenditures, what kind of money companies are spending on are they up or down? Kind of give an overview of where they see the market as it is and where it's going. There's something called the Logistics Managers Index, which is a really great tool. There's several universities that have collaborated together and they just kind of put out data and they talk about warehouse utilization, warehouse prices, inventory levels, all that good stuff. So that's really what's in my newsletter. And again, they're short blurbs just to kind of give people an idea of what we're following.
Yeah, I'm subscribed and it's a fantastic newsletter. So I'd encourage people to check that out. I will also subscribe to your YouTube channels, which because
Thanks. Thank
like
you.
you, I'm an industrial real estate nerd, and
Yeah.
with the overlap that we talked about with supply chain, it's a natural for me to learn more about that. So I'll be subscribing to that and encourage people to subscribe to your newsletter and your YouTube as well. And just wanted to thank you. That was a fantastic chat. Hass and others for joining in and the questions. That was fantastic. But yeah, David, thank you very much for jumping on and sharing your knowledge and expertise.
Yeah, thanks for having me, Chad. I've been following you for a while. You put a lot of good content out there. So everyone, if you don't know, follow Chad on YouTube as well. He's got a great website, really good content. And I would agree, there's not many people talking about industrial real estate that I can find. I mean, so just follow him, talk about it, and just keep up the great content.
Much appreciated. And I'm sure we'll continue the chat as well.
Yeah.
So once again, thank you. And thanks everyone for tuning in and hope everyone has a great weekend.